This is Rahul. He's 32 years old, living a normal life, works hard from Monday to Friday, saves whatever he can at the end of the month. One morning, Rahul wakes up, switches off his alarm, and the very first thing he does, he checks his phone. The year is 2026. News headlines talk about inflation. Markets are moving up and down. Friends are giving investment advice. And Rahul keeps thinking, am I investing my money in the right place or making a big mistake? If you've ever felt this confusion, then Rahul's story is your story. As Rahul scrolls through the news, his confusion grows. Inflation is still high. Interest rates refuse to settle down. Markets move up one day and crash the next. Rahul feels stuck. Everyone around him has advice, but no one explains the full picture. So, Rahul decides to slow down, take a step back, and understand all his options clearly. In this video, Rahul will explore every major place where people think of investing in 2026. We'll talk about gold, the traditional safe haven. We'll look at silver, the underrated metal linked to future technology. We'll break down real estate, the big dream, with big commitments. We'll understand bank deposits, safe on paper, but affected by inflation. And finally, crypto, exciting, risky, and often misunderstood. By the end of this video, Rahul doesn't want excitement. He wants clarity, and that clarity might help you too. The first investment Rahul thinks about is gold. Not because it's exciting, but because it feels familiar. Rahul remembers something very clearly. In 2025, gold prices were rising sharply. Whenever inflation fears increased, whenever markets looked unstable, gold quietly moved upward. News headlines talked about investors running towards gold. Central banks were increasing gold reserves. For Rahul, this wasn't coincidence. It was a reminder. When uncertainty rises, people trust gold. In the current situation, Rahul notices a few things. Inflation is still not fully under control. Global risks haven't disappeared. Markets react sharply to bad news. In such times, gold doesn't promise fast growth, but it offers emotional and financial stability. Rahul understands one important truth. Gold is an investment to protect wealth when everything else feels uncertain. For 2026, Rahul decides gold will be his anchor, not the hero of his portfolio, but the shield that protects it. While researching gold, Rahul notices something interesting: silver. Silver doesn't get much attention. It doesn't shine like gold, but silver works silently behind the scenes. It's used in solar energy, electric vehicles, modern technology. Rahul learns that silver is more volatile. Prices move faster up and down. That scares him a little, but it also excites him. Silver feels like opportunity mixed with risk. Rahul decides silver will not be his foundation, but it can be a smart supporting pillar. Then comes the biggest dream: real estate. Rahul imagines owning a home, monthly rental income, a solid asset for the future. But numbers don't lie. Property prices are high. Loans come with long EMIs. Selling is not easy. Rahul understands that real estate demands patience. It locks money for years. It rewards slowly. For 2026, Rahul realizes real estate is powerful, but only if timing, money, and patience align. Rahul walks into his bank. The banker smiles and talks about fixed deposits, guaranteed returns. The banker says, "No risk," he adds. Rahul likes how safe it sounds. There are no sudden ups and downs, no sleepless nights. But then Rahul pauses and thinks deeper. He remembers how prices have increased over the last few years. Groceries, fuel, rent, school fees. Even though his money in the bank is growing slowly, its real buying power is quietly reducing. Rahul realizes something important. Bank deposits don't lose money suddenly. but they also don't protect against inflation very well. For 2026, Rahul makes a clear decision. Bank deposits will be his safety cushion for emergencies, short-term needs, and mental peace. But for long-term wealth, Rahul knows he needs to look beyond the bank. Now, Rahul reaches the most talked about and misunderstood option, crypto. He remembers the past few years clearly. Stories of people becoming rich overnight, and stories of people losing everything just as fast. Crypto feels exciting. It feels modern, but it also feels unpredictable. In recent years, crypto has matured, more regulation, more awareness, but still very high volatility. Rahul understands one golden rule: never invest money in crypto that you cannot afford to lose. For Rahul, crypto is not a shortcut to wealth. It's a learning investment, a space to understand technology and risk. He decides to keep crypto exposure small, well-controlled, and long-term. No daily price checking, no emotional buying or selling. Crypto becomes a calculated experiment, not a gamble, and that discipline makes all the difference. After looking at every option, Rahul finally stops overthinking. He realizes something simple but powerful. No single investment is perfect for 2026. So instead of chasing the best option, Rahul focuses on building balance. For growth, he chooses equity through mutual funds and index funds, not because markets are perfect, but because long-term growth has always rewarded patience. To protect his money during uncertain times, Rahul keeps a portion in gold and a smaller part in silver for future-driven demand. For safety and emergencies, he keeps cash in bank deposits, knowing this money is not for growth, but for peace of mind. And for learning and controlled risk, Rahul keeps a very small portion in crypto, money he is fully prepared to lose if needed. Rahul's biggest lesson for 2026 is this: don't invest based on fear. Don't invest based on hype. Invest based on your goals, your risk comfort, and your time horizon. 2026 is not about getting rich quickly. It's about staying consistent, staying diversified, and letting time do the heavy lifting. If Rahul's story helped you think clearly about your own money, like the video, subscribe to Pocket Money, and share it with someone planning their 2026 investments.